Hey everyone, John Henry here, Slingshot Futures Trading Group, SSFTG. Welcome to this video. In this one, obviously, good old layout, we know this one. It's going to be a candle-by-candle analysis where we look at the psychology inside of the candles, what's causing the candles to move, or what we perceive is causing the candles to move, and kind of build a story off of that information to try to gauge where the best entry points are, where the worst entry points are, where people may have been trapped, etc. So starting off, we have a very nice gap to the upside. And with that gap to the upside, it's an outside gap up after the day prior has already had a very strong rally up. With this amount of bullishness, it's fairly obvious that, well, bulls are looking for a bit of continuation here. And with this big outside gap to the upside, my first thought is, okay, if we're opening outside gap up, is there bearishness? Are buyers using this as an excuse to exit, right? Or at least reduce their position sizes a little bit. And we see bullishness out of the gate. So the first candle of the day being a very strong bull bar, outside gap to the upside, showing that there's a lot of potential movement to the highs. I mean, there's a lot of good context here. Let me turn off the global drawing objects. There we go. So for the overall movement that we've got going on here, the first candle of the day is looking pretty darn strong with that outside gap to the upside. And looking at volume, we can see that, while there might be some question marks, the POC's at the top and the market's closing on the highs. But, well, we're not seeing the buyers taking profit enough to cause a pullback, realistically. So we're probably going to go a little bit sideways or further up. We get another bull bar back to the upside. If we look between these candles, one thing that I'd like to see in terms of a strength gauge is gapping from close to open, and that's not the case here. We only have the first two candles of the day so far, and the second candle is very strong and bullish. If we look at the overall volume, the volume did stay back at 59.50. So realistically, a lot of traders are still potentially long off of that initial drive, and they may have just bought the close of that candle. That may be where that big POC came from. And for the moment, at least, we have to assume that they've got some movement in their direction. So we want to pay attention to, where some of their targets are going to be. A scalper's target has already gone through, so the next objective then would be a 2-to-1, and that's got a little bit more movement to the upside. So you've got to see, can they reach out to grab something like that, or are they going to fall flat on their face? They only have the first two candles of the day, and doing anything on the first two candles of the day can be very challenging, not my preference. I would rather wait to see how this third candle sets up. We get a doji. So, I mean, the doji doesn't disprove the bulls. It doesn't help the bears at all. So that would suggest then that would make a lot more sense for bulls to be buying on the dip. If they're going to be buying the dip, buying at least underneath the previous candle's low would be the first point of interest. We haven't really had that big of a move, so that would be the only real pullback there would be at this point in time. But we also have some candle gapping. And pulling back into that candle gap would be a zone of anticipated support to try to push the market back up again. If we're looking at how the volume closed on that doji, we've got the POC, which is still back off to the lows. So really, this creates a major zone of interest for bulls to stack up in around that POC to the top of the bull bar, and they kind of intersect with one another around that 61. So the top of that previous candle, that's going to be the zone of interest, and bulls are going to be looking to build into this for upside momentum. Their initial risk is likely going to be underneath the lows, which means that they're probably going to be scalpers, because that means their target is back to the high. That said, if shorts are going to try to take this lower, it wouldn't make any sense until we're at least back below the POC, at least underneath. I mean, we've got bullish candle gapping. Why short into that kind of strength? There's just no reason. So sellers likely won't be here on the party. It makes more sense that bulls buy the dip. We do get a dip down into that. They go right down to 61, and they ping right back off of it, closing back up. It actually never even closed lower. Looking at the volume cluster on that movement here, we've got the POC, which actually moved higher, but the market closed above it still, demonstrating a lot of bullish continuation. Now, we already know the bulls are in. They've already had their original entry points taken in. Their targets are going to be at the high of day. They're just kind of hanging out and waiting at this point in time, and closing above a POC certainly isn't going to concern them any. Another nice bull bar, and notice the wick that came back and where that wick came back to. It was back to that break-even point. So if the buyers did buy in here and scalp out of something, maybe a point scalp, something along those lines, pretty common, they bought the retest and reloaded back up, closing that candle right back on its highs again. As far as the volume is concerned, if we creep this a little further forward, we have the POC moved up again, and yet again, the market closed above it. It is really demonstrating a huge amount of volume that's trying to push the market higher, and it's sustaining it so far every time it closes above it. We do get more continuation to the upside, and the market stops dead in its tracks right on the scalper's target. It closes there. Not a huge surprise. They did pull back a little bit in some of that candle gapping, but we know at the very least that we have scalpers who have gotten their targets filled. Now, beyond that, if we creep this a little bit further forward, we haven't had a single bear bar, and notice again where the wick pulled back to, the POC. It's almost as if longs are building into positions because every time it tries to close underneath it, it doesn't. It closes above it. Totally opposite of what the sellers are trying to get going, and really indicative that the buyers are buying like everything. They're just buying everything they can get their hands on so far, and these POCs are really demonstrating that. We are starting to break away now. Breaking away from the POCs, fresh highs, new volume. They're going to have to do a little bit of work and figure out what they want to do here. Scalpers are taking their targets here, but again, fresh highs with this amount of strength. The next objective, if they clear through this, is going to be a 2-to-1 to try to finish the job. Nice big bull breakout. So if the bulls weren't sure, this really proves it, right? This breaks above the target area. This is everything. And notice we have candle gapping. They close and open with a jump to the upside. The only other time we had some candle gapping was after a doji. They closed and opened with a slight down gap. That makes sense because people didn't want to see a doji. Here, we're gapping above traders' targets. So not only did they get filled, now it jumped over it, and started screaming. If we continue this volume to the upside, we've got a little bit more movement, and the POC is now beginning to get left behind. We haven't had a single bear bar, not a one. So any pullback that the market gets is going to be likely a zone of interest that buyers will be buying into. And along with that, notice these wicks that are kind of building along with it. Think of this as a channel of support in and of itself. Any pullback into that channel of support is going to be a zone of interest. I think I've got a tool for that. Hang on. Where's the channel tool? There it is. Channel tool right there. So you've got kind of like that pocket of wick, that zone of support that's climbing along with it, and the market seems to be sustaining that support. We have a bear bar off of the top, and that's a heck of a bear bar. Jeez. The sellers, I mean, do we really think that these are sellers coming in, or are these buyers that are just taking profit? Realistically, we just broke above the scalper's objective. We already know that. But remember, the POC has shifted higher. That was just the scalper's target from this entry point. But if we're going off of the average of the traders who have done the work here, the contracts who actually build these areas, where are we? Right? Their scalper's target was filled here, and we broke above it. Now, as we know, when a market breaks above a major target, I want to see when the market pulls back to it, because a lot of traders, they're going to be looking to re-up. They got out of their trades, that goes right through where they wanted it to go to, and they realize, ah, crap, I got to get back in that thing. Where are they going to get back in at? Well, they might as well get back in at where they got out at. It's basically no change at that point. They paid an extra $5 for the slip up, right? Or whatever your commission cost is. So it's a way that they can kind of replenish stores without remorse, if you will, right? They don't have to feel too bad about that. And with this break above and noting that this bear bar is closing above that at least helps. We aren't pulling back yet to this zone of support, this pink rising support here, but we do know that the scalpers are going to be looking for a continuation up, and it is definitely 2-to-1s the rest of the way if they can keep this thing going. Okay, well, we've got a little bitty inside bull bar, and visually it just nicked the corner, just kind of fuzzed the hair off the top of that. And with that kind of inside bullishness, that's the only bear bar that we've had this whole time. We have volume that's starting to build up at the highs. Let's see if that changed on this little inside bar here. It did. So notice what happened. They shift the POC to the upside, and they closed above it again on this inside bull bar after nicking this little bitty level of support. It visually nicked it. It didn't actually test it, just clarifying. Now they're closing back above. Everything is saying that the bulls still have control. It feels psychotic, but the bulls still have control here. They're grinding higher. Notice also, we do have some candle gapping that is not closing. That further suggests that we have upside momentum targets that would be leaning out towards, at the moment reaching out towards 74.50. That would be the candle gap target right up there. We've got more bullish continuation to the upside, starting to break away. Sellers, if they were trying to short it, didn't even get trapped. They didn't even have a chance to. It never triggered. And now we're rotating back up. And notice again, we're coming back. This time, though, something that has not happened. They didn't actually come back and test the POC. They left it alone straight out of the gates. They closed above it, gone. That's important. That's very important to note, because now that's starting to suggest that shorts are trying to get going. Maybe they're shorts from yesterday. Maybe they're longs that are taking profit. For whatever reason, there's sell orders coming in. The assumption would be sell because the market's going up and volume is increasing. So with this volume suggesting sell orders and we're breaking above them, those are sellers getting trapped. That is a perfect scenario for a squeeze, and seeing this breaking away from the volume couldn't get any better. The only problem is that we've got the bull target right around the corner, which still has yet to hit. But now that we've hit that, there we go. Okay, so they got the target filled. If we can get a little bit of a pullback back down to this area, it would make a huge amount of sense for the bulls to re-up and continue that move back up, because look where it lands now. Notice as well, we also have candle gapping. But this POC lines up right in the bullseye zone, right in the drop spot. That's the you can't put a better spot on that. That's right in the pocket, right in the slot. That's where they want to get in at. Beautiful pullback. The market closes right inside of that little slot there. Let's move this a little bit further forward. We've got the bear bar. The POC is still hanging out there. It is absolutely perfect. Bulls will be looking for a continuation phase here. These are new bulls, right? These are potentially shorts exiting, re-upping the longs, etc. They don't really know where the market's going to go because they're effectively having to buy way up at the top. So that means that we're looking at these traders like they're scalpers. That would be the assumption. So their upside objective at the moment would be 79.50 if they can get that area going, if this does want to trigger in the shorts underneath this bear engulfing. I don't believe this bear engulfing at all. Immediately pings right off of it and jerks right back up. These sellers, or assumably sellers, have now been given a chance. They've been thrown a bone. They've been allowed to get out of the trade. And that leeway, that ability to exit, is why we're seeing such a panic. Because really, what have we had? We've had two bear bars and a doji. Everything else has been bullish, and we're talking 1035 now, right? So, I mean, this thing's been straight up, no remorse. Realistically, any bulls who are looking to re-up into that, remember the earlier scalpers' objectives were back here. We haven't necessarily had a pullback there, so if it does want to go a little further, maybe there's another response zone. But this is looking very, very strong. Now, the one concern that I do have is that we are getting stuck around the candle gap objectives. Right here. The bulls need to get through this. If this causes some problems, they might not hang out for too long. Fantastic. Closes right on top of the candle gap. Great, thanks. We do still have that nice bounce off the POC, but that's kind of a bummer. Let's creep this a little further forward. The POC is still back at 44.71, so that's okay. The bulls, if they are buying above this bull bar, are in, right? And they're looking for that continuation up. We already know that the bulls are in from down here, but it still lines up. Okay, that would be the third bear bar of the sequence, and it did go just a little bit higher and now coming back. This bear bar is proving nothing, mind you. You have to look at this and say, okay, in this context, if I were totally flat, and I looked at this and said, man, that's a beautiful bear bar that I want to short. Would I really say that? No, I don't see that. If I were going to take that short, that would be one where it'd be like, okay, you know, it fits the bill. It's worth the risk in terms of what it's offering. If you're shorting underneath this with a risk above the highs, but the reward is way down here. Even down to here, you're still at like a 3-to-1. The probability doesn't have to be that good to take that type of trade. So there will be shorts who will try to jump in here if it triggers. And it makes sense because we're running into some resistance that's causing some problems at this candle gap. Okay, the bears never trigger in, and the bulls creep back up and create a new high. A lot happened, it doesn't seem like it, but a lot happened on that little bull bar. We broke a new high. They never triggered the bears. That means that nobody else is stuck, and all of the earlier shorts who were trying to push the market down have already exited. This allows the bulls to creep it back up, and that upside target is looking much, much more likely. We're creeping back up. Another nice bull bar, more continuation higher. Let's see if anything is changing here. We've got a POC right up at the top, but look what they did again. They closed above it again. Still, it's still going. The shorts are so stuck right now. They keep pushing these POCs to the upside. No remorse. They're still going, still going. Holy cow. Let's go to the next one. POC is starting to get left behind again. Right there. They're leaving it behind. There's the breakaway move. We're starting to creep away. The sellers are realizing that they're running into some... They're just beat. They're done. We're getting a little more continuation. We're getting closer to the targets, closer to the objective area. The POC is getting further left behind. You can feel them getting squeezed if they are still short. Remember, a lot of these shorts may have already exited, but if they didn't, they're sitting here in pain just, oh, no, please, no, please, no. So this next target area for the bulls is going to be the next spot where sellers, if they're going to try to hit this again, that's going to be where they respond. But remember, we still have bull targets further up at 84.75. So is this a spot where they are going to necessarily stop knowing that shorts are getting squeezed so aggressively? Maybe not. We've got more bullish continuation, and notice they're closing above the target area, adding and reinforcing even more to suggest that the market wants to continue. Let's see what the volume is looking like as we get a bit closer. The scalp target has been filled, but the next objective is going to be up here at 84.75, which hasn't been hit yet. We have fully cleared away from this move to the upside. And if we narrow this up a little bit further, really, the channel, they just kind of fallen into that zone. It's a slight concern that maybe we start transitioning into a slightly more sideways market, but the upside objective is still looming there, probably going to grind up into that. Nice bear bar, going a little bit sideways. Let's finish off the day and see what they want to do. Upside objective is right there. It's so close. Did they get it? There, they finally got it, and they closed above it again. It took them all day to finish off that last little bit that they easily covered the majority of for the first 2 hours. What a mess. So a fantastic overall example of just a crazy runaway market. And you can see it in the volume, the aggression, just buy everything, buy everything, buy everything. There was a pullback, buy that too. There's wicks, good enough, buy that too. It doesn't matter. When you have that amount of aggression, you've got buyers buying for any reason, you have a market that continues to the upside, and it looks like this. They did eventually get all of those targets filled. What a crazy runner. That's going to do it for this one, though. Hopefully you found it useful, entertaining, interesting, and maybe something in here, a little tidbit that you found useful that you can add to your own little tool belt there to further and advance your trading career too. But I hope this video finds you well. If you have any questions, you can drop them in the comments below. Don't forget to like, favorite, and subscribe. We did pass the 2,000 subscriber mark. Booyah! But with that 2,000 subscriber mark out of the way, now we're climbing up to the next big one. I mean, there's obviously 3,000 and 4,000, but let's get on those psychological levels. 5,000. Let's push for the big numbers. So let's push for those. Subscribe, like, and do all that fun stuff, and we will see you in the next video. Thanks. Bye.